Hey everyone, hopefully you're having a good day. My name's Andy, the channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it, generally related to three different topics: wealth building, commodities, and or financial topics. So let's dive right in, take a look, see what's going on today. If you want to follow me at @Finance, and if you want to join our community, findingvalue.com, I dive into all this stuff and answer your guys' questions on the weekends during Q&A sessions. Do midweek updates on companies that we follow in the community. And we have a special coupon code in the corner if you'd like to sign up. That works on both the monthly and yearly memberships. The monthly membership is only 50% off the first month only. And then it's a larger discount for the yearly memberships. And you can always switch from a monthly to a yearly. Pitch slap. I was just reading this. He's saying IQ is just a number. It's like saying a bank balance is just a figure. The number matters because of what it measures and predicts. I'm baffled why so many people struggle with this. Just an FYI, I know what IQ is. I don't know exactly what my IQ is. I've tested it, on online tests. I don't know how accurate those things are. But I will say this. Here's some statistics and some things that I've noticed over time. The lowest IQs are found around the equator. IQ predicts your length of life. You have a higher statistical probability of living longer the smarter you are. And I think that's just making better decisions as time goes on. So it's not. This is where people struggle. And this is. I'm going to be a little bit straightforward here. Lower IQ people don't understand statistics. It gets quite annoying to talk with people who don't understand statistics at all. Just because you're smarter doesn't mean with 100% certainty that you will live longer. What it means is that the majority of people who have higher IQs, on average, live longer. They have lower car insurance. They have better FICO scores. They generally make more money. And this is just statistics. IQ is genetics based. There's been studies done on intelligent quotients where they take twins that were separated at birth and then they see how well they correlate given they have grown up in different environments with different parents. So twins that were, abandoned or whatever and lived in two different families. The statistics behind it is that IQ is genetically linked by like 80%. So the tough part here is IQ is more genetics based than it is something that you can teach or train, which is a rough one. Everyone I think is born with an IQ at a certain, let's say maximum level. And it only goes down from there if you don't get enough nutrients, if you're not getting enough of what you need when you're a kid, whatever that is. It only can go down. It can't go up. So you kind of lose it if you don't have the right environment to be in. But there is a maximum. It's not like there's an unlimited amount that is out there for each individual's genetic potential, call it. Money Talks in 1974, this is how it was assumed that nuclear energy would fit into the energy mix. Can you imagine what the uranium demand would have been? So this is what I think someone proposed. This is provided by the Economics Ministry BMW Energy Program in 1974. This is the first model of primary energy consumption based on the economic growth scenario provided by the Economics Ministry. This will occur. We will roll over in oil at some point. We will roll over in nat gas and coal. And then nuclear power will take over. The timing, I don't know. That's kind of up in the air still. I've talked to other pretty smart people who've been in, they've gone through engineering school. They've gone into a variety of different majors. I'm not saying that they're qualified for anything, but I would talk with them about their opinions on energy consumption and stuff like that. And I think most would say that we will burn all of the fossil fuels that we have on this planet Earth because of how great and how energy dense it is. Then we'll switch to other things. Nuclear will find its role. Um, we do have our doubts with solar and wind, just based off energy return on energy invested, but maybe it gets better out in the future, and maybe solar will do better than what we have today. But there are maximum numbers that you can basically collect through solar. I can't remember the name of the maximum amount that you can get. There's some sort of theory or whatever, but I can't remember that. Kevin Bambaro says, just to be clear, I talk about what I'm looking at, how I'm thinking and feeling, not investment advice, not health advice. I'm not a doctor. I'm not your fund manager. I'm just a guy doing research and trying to take better care of his body, mind, and financial situation. Not only do you need to do your own due diligence to confirm anything I might dig up research wise, but if you don't read all of the information, you never get conviction. I'm always amazed how people I know, even some at top investment minds, are busy and don't get around to doing a deep dive into opportunities that come about. Often people casually buy some because they value opinions of others, but there's no substitute for putting in the time. Put in the time, or put the time in. To build conviction is what he's talking about. And putting the time in, it's not even that hard, guys. Like, maybe people are just confused on how to, quote, put the time in. If you find an investment and you want to learn and gain conviction in investment, this is what I would do. I would go to their website and I would start reading through their presentations. If you want, you can even read through a couple of their earnings statements. Now, just because they have an earnings statement doesn't mean that looking backwards is going to be great when you're looking forwards, because the market is forward looking and trying to price what the company will do, not what it has done. So when you look at this, you want to know what the company's plans are, basically. So you look through their presentations, you say, yep, they've got strong plans, and they've delivered in the past on those plans. That's another important factor. It's not just having plans, it's delivering to them. If they've delivered and they've got projects coming up, at least you know what's coming. So it's not like, oh, I'm in this company, I know nothing about it. I can tell you a pretty high level case of the majority of companies that I own. I can tell you the high level case of why I own it. Well, actually, I could tell you why I own it of every company, but a high level case of from presentations that I've read about the company and kind of roughly where they're at. It doesn't mean that I can recite it, verbatim of every company of every single day, but I know high level generally what the company's doing. They've got some projects. They can grow production. They're bringing on a project. Stuff like that. You don't have to know absolutely everything. You just need to know, in my opinion, kind of the high level stuff that gets you conviction. So it's like, you know what? That company is bringing on oil back half of 2025, beginning of 26, and they've got 3 other projects that are coming in 26 and 27 that are going to add to production. So then you want to look at, you say like crude oil price and say, we have crude oil's down right now. It's cheap. Could be a good entry. And then you've got that conviction of kind of that high level case of what's coming. Other people, they rely more based off technical analysis only, and they don't know anything about the company. I think that's more dangerous. There are times where the technicals could look bad, but I would continue to hold. The technicals are not everything. It's only a probability. It's not 100% certainty. So you're playing with probabilities, but if you know the underlying thing of what's coming, and you're coming into a bull market, I would be more inclined to hold given the conditions that we're in versus a short-term bearish technical chart pattern. And that's what separates me from a lot of other people is I'm willing to hold through. And it depends what the company's doing too. If you know the fundamentals, if they're buying back shares, they may not get the pullback like the other stocks in the sector will. They may continue to go up depending on how aggressive their buybacks are. So I think it's important to understand as much as you can about the company on certain areas like share count, buybacks, all these different things. Have they been diluting shares? If the answer is yes, they're probably not very profitable, or they're not profitable at all, or they have no income. And that might be a little bit riskier. There's a whole bunch of things that you can look at. Patrick Karam says silver, nobody is late. The bull era has simply not started yet. And he's got this downward move here on XAG USD versus SPX. But when I chart it, I get something different. I don't get that. I mean, yeah, we're early in this. Don't get me wrong. I totally agree with that. This is silver to SPX ratio. I get a squeeze into a corner here, like a monster pattern starting back when the Federal Reserve was created. And then if you scroll in to where this is, I just went off the top points here, and basically we've broken out and we're heading higher in XAG divided by S&P 500. So what I do is I always do my own work, guys. I always do my own work. I don't rely on other people's stuff. I do the chart myself and I say, yeah, it's broken out. It's good. Now, I'm in the belief that it was good to buy it all back down here, this whole area. Why? Because it's cheap. Why would I wait for something to go up and buy it after it's gone up if I already like it and it's cheap? That's the difference between maybe a technical mindset and my mindset. I look at value, and one of the things that I do to look for value, we can go through this real quick here, is I look at the silver to gold ratio. And if we're really, really low on the silver to gold ratio, perhaps, we can throw something like this, right? We're kind of squeezing into a corner there where we could potentially break out. I can also put this lower here and just do the edge here. It doesn't really matter. But it's at a really low location, these two locations. 2020 was really low, and we were very low here in April of 2025. I would have been buying like heck. Now, I bought a whole bunch back here in this general area. Silver was a lot cheaper back then. So if I were to put, so this is the silver price. I was buying it down here. I didn't transact any at $14, but I was getting in the $16, $17, $18 range from people. I was buying it directly from people at spot price, no premium. So that's what I thought. Man, this ratio is it's out of whack, and I can get it super cheap. You can also see that this was a kind of a bottoming pattern here as well, and I take that into consideration. And this was your double bottom here. This is your breakout, your retest, and then the move higher of what we're in. So this was a big bottoming pattern. If you want to know, palladium's right here in its breakout. Just an FYI. So I went and I bought a whole bunch in 2018 at the bottom here. I like buying there. I bought some in 2020 when it dipped, and I've been riding it ever since. I bought a little bit through here too, in the early low 20s, and I've just been riding it. So I don't wait for this stuff. I don't think it's needed. If your value is there, then that's what your protection is. Your risk reward is based off the value and how cheap it is compared to history for a lot of these commodities. And if you're underneath the cost curve, we were definitely underneath the cost curve at 14, 15, 16, 17, $18 for the high cost producers. But yeah, this looks like it could break out any second. We could see a big outperformance of silver versus gold, and I want to be a part of that. XLE, energy has been stuck below resistance for nearly 2 years. If oil is going to make its next move, this is where you'll see it first. A breakout here isn't just a trade. It's a trend. Exactly. It's a trend. And you know what else is already broken out? Copper. Silver's right at the same spot. They're all up there. Copper's sitting on top of its pattern up here. So all of these, they're all saying the same thing. It's not that one sector's doing it, they're all doing it. And that means your currency's the driver. And since copper's broken out, silver's gonna probably break out here any second. Gold's already ran. Basically, this I think will follow. It's gonna follow all the rest. Never forget. So Thomas Sowell says inflation is a quiet but effective way for the government to transfer resources from the people to itself without raising taxes. That's it. That's what inflation is. Rig count for July 18th. Oil's down 2. Natural gas is up 9. Pretty good. If you're betting on a weaker US dollar in the back half of 2025, that may not be the right way to look at this. I've got the dollar going up. If you draw kind of a trend line going through here, that's broken. So this is going down, but we have the relative strength indicator going up. That divergence generally works its way on up. Is what we're looking for, a bottom, basically, not a move lower. This is accurate. The biggest scam in life: paying taxes on the money you make, paying taxes on the money you spend, and paying taxes on things you own that you already paid taxes on with already taxed money. Yeah, it's a lot of taxes. See, this is why I think taxes are way more than what people think. And you also have to keep in mind, yeah, we have federal and state income taxes. We've got sales tax. We've got all these taxes that are embedded in like your cell phone bill. There's state taxes in gasoline, so you're paying after tax money on taxed gasoline. Then you pay all of the taxes of corporations. Individuals do. Corporations pay zero tax. They pass that crap right along to the customer. So you pay all of the corporate taxes as well at every single stage, if it's a vertically integrated company or not. So if they're passing goods along the supply chain, you pay all of the taxes of every single company that touches it and earns profit on it. Think of how much tax that is. Then on top of it, you've got this inflation tax, where inflation is taxing or stealing purchasing power out of the currency. I would be surprised if people aren't being taxed anywhere between 50 and 90% on money. It could be even 95%. and they just don't realize it if you just sit down and do all the math on it. The S&P 500 could reach more than 10,000 year-end 2029 based on past cycles. So I thought this was kind of interesting. I was looking at this. This is long-term bull market, see peak acceleration to 500%, 10-year return. So they have basically this cycle going from 1897 all the way up to 1929, 42 years. Then you had a big pullback. Another big bull market for 20 years. So like 1940 all the way to maybe 1960, 61, 59 it says there. All the way back 15 years on the pullback up there. Then we went for 26 years in a big bull market, had a 9-year pullback. And now from 2009 till today, they said maybe the year end 2029 is when this peaks out for this S&P bull market. That could be the case. That could be the case. And yeah, I'm not saying it can't, but that very well could be the case. Alfonso says technology versus consumer staples ratio is breaking out above the dot-com bubble highs. When this line's rising, money's rotating into offense and out of defense. It's worth paying attention to. So technology outperforming consumer staples is an offensive play, not a defensive play. And we're also seeing other offensive kind of inflationary sensitive sectors move up. So it's not just this one chart. We're seeing other stuff across the board. Tavi says, an important reminder, when gold goes, silver leads. With gold now above 3,300, the silver side of the story is about to get a lot more interesting in his view. Silver has formed one of the longest cup and handles on record. From what I've seen historically, patterns like this often resolve with explosive upside. Agreed. Agreed. We could see an explosive move at some point in silver when it busts out of this big old pattern. Yeah, it's gonna be one for the record books. Pre-futures AM update: dry bulk down 3% for Capesize and flat Panamax. Tankers up VLCC 2% and Suezmax is flat. ANZ says iron ore futures traded above USD 100 per ton as traders turned optimistic around improving steel mill margins after Beijing indicated its intention to remove overcapacity. Lower inventories for both iron ore and steel are boosting expectations of restocking over the coming months. China's imports of iron ore hit 106 MT in June, up 1% year over year. I do think there's opportunities in iron ore. Steel, yeah, there's some, but I like iron ore. Grady with URA versus SPUT. Uranium miners did a 580% in its baby bull move, but the big move is still ahead of us, as miners have not yet even begun to outperform the uranium price. That has now changed since the ratio chart below is now breaking out. In the link post back in April, it says the secular uranium bull still has a very long way to go, but the sector has been declining in a normal cyclical bear market for the last 14 months. Therefore, we've been out of the uranium at the service for the most part during the 14-month big correction. I've not posted much on uranium here for at least a year because of the uranium charts being in decline. The chart below now finally looks ready. And that is when we bought back in the sector at the lows for URA, URNJ, URNM back in April. And then we added after that. And that's the move right here. This big move coming on up, bullish falling wedge in the purple there. And we can make a very big move. Breakout is in the making right now of this resistance line for URA to break out against SPUT. This chart shows that uranium miners have not yet even begun to outperform the uranium price, which is what makes a bull market. A very stylish and bullish chart is in the making right here of uranium, URA, outperforming SPUT, the physical entity of it. He's got a shoulder, head, shoulder bottoming pattern, and then we're trying to break out of the neckline right now. Big moves in uranium expected ahead. I thought this was an interesting one. Uselink posted inflation divided by DXY. It says when inflation breaks out and starts to outperform the DXY, it's also when gold starts its massive move. We are currently at the cusp of a massive 15-year breakout for inflation over the dollar. And I just saw this. We had this big consolidation from 2007-8 to where we are today in the breakout. Remember all those other charts like copper, silver, gold led all this, but this all says that it's about to start. Like we're right at the beginning of this big breakout. And this is gold priced in USD down here. And then this one here is the CPI divided by DXY. It's very correlated charts. And everything's in cahoots with each other. It's good. It's good. The quality of your mind is the quality of your life, says Naval, which is true. Kramer going negative on oil and gas is the best news investors in the sector have had all year. This is potentially more bullish than renewed conflict in the Middle East. Thought that was kind of funny. I don't know how he does it, but I swear to God, Jim Cramer just creates demand for stocks so his buddies can offload it to retail. I think that's what he's doing. OpenAI says, I will pay 2 times spot rates to secure energy for my data center. Don't care if it's wind or coal. Meta says, I'll do 5x spot rates. Any energy other than a melted down nuclear power plant. Google, I'll take the melted crap 7 times rates. Shamath, energy costs are going to 0. Yeah, that's an interesting take on that. I think Shamath is going to be wrong, but whatever. If the homies are going to go, I bet lumber won't be far behind it. Are we going to get a breakout in lumber to the upside? If it is, that's going to go counter to the majority of sentiment on Twitter. But I don't know if that sentiment really matters. Everybody's negative on housing market for the rest of their life, it seems like. What I see in the numbers, I see a big squeeze. That's what I see. How can you have home prices and rental rates be high at the same time simultaneously? That's because you have a lot of people looking for homes. That's what it is. You need people looking for living space. That's how it occurs. Silver inflation adjusted price breakouts from 12-year long bases. Just as gold divided by CPI is an excellent indicator for gold miners, silver divided by CPI is for silver producers. Silver divided by CPI at top, followed by SIL and SILJ. So this is your silver divided by CPI. You can see that we're just trying to break out right here. When this breaks out, you're going to see a breakout on SIL and a breakout on SILJ, and these things are going to run like hell. I'm excited. I'm excited for this. We're right there trying to break out, and it looks good. It looks very promising here for that to occur. Oh yeah, North Star. Is platinum finally going to enter a bull market versus gold by passing through the evidence cluster? This is one of around 100 charts that we cover every week for members in our Market Roundup podcast to make sure we don't miss the big signals. I'm already in it, guys. Platinum was cheap as all get out. It was basically riding sideways just underneath the high cost producers below the cost curve. I saw that as a huge opportunity. I bought a whole bunch with premium under $1,000 with premium. So I'm waiting. And yeah, and then all this stuff's going to come next. They're all going to break out, and then the technical analysis guys will say, "Yep, we have an official breakout. This is where I would go in, and it's probably going to be 1750 by then." I'll basically be up almost a double at that point. A double on some of my holdings, almost a double on other things. So yeah. Energy headline news: Retail power costs in the U.S. are rising rapidly, says per Bloomberg. And look at that! Look at that go up. I have a lot of people. They're trying to sell me solar panels all the time. They're like, "Hey, you could have solar. You could have solar." And in Colorado, we're really sunny here, so yes, definitely is the case. But I mean, I don't spend that much on my electricity bill, and they want me to spend tens of thousands of dollars to put that up. They're like, "Oh, but you could sell it back." I'm like, "Look, that's a lot of money to spend to basically, even if I were to wipe out all of my electric bill, it's basically saving nothing." There's sayings like focus on the big hitters, right? Focus like the 80/20 rule or whatever. I mean, my electric bill, it's like nothing compared to my food bill. If there was a way to dramatically decrease my food bill, well, that would be cool. But I'm not willing to sit out there and do my own farming, so to speak, and have all that stuff. Maybe it's easier than what I think, but um, probably won't necessarily do that. I have to buy, land and other things. But I don't know. I mean, I just look at this. It's like, man, this isn't good. Things are going up. It's going up big. And that's what I've got for today. So give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you like. But that's all I've got for today. So we'll catch you next time. This is Finding Value.